Good morning, traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for Friday, March 21st, 2025. So I hope everyone had a good, restful evening and ready for Friday's trading session. We don't have a lot of economic or earnings data to deal with today, so it'll be interesting to see whether or not the market will even find a whole lot of inspiration for the day. Let's take a look at what happened overnight. If we look at Asian markets, we were mixed last night. Australia and India, South Korea were higher, while the Nikkei, Hong Kong, and Shanghai were lower. And Hong Kong had a real rough day, down 2.19% or 530 points. And Shanghai, 1.29%, down 44 points. So those that were selling had a little bit of a rough day. If we take a look at European markets this morning, European markets are red across the board. And this is after the German House this morning, the upper house, approved their debt reform to start funding more of their own defense. And well, at least I don't know if this is the result of that, but right now the markets are not feeling too happy. The DAX is down 158 points or 0.69%. FTSE's down 0.37%, and the CAC is down 0.67% this morning. Looking at U.S. futures this morning, we are also lower. Feeling a little bit of bearishness here this morning once again. Right now, Dow futures down 128 points. Now, that's been improving since I got to my desk here this morning. And the S&P 500 futures down 20.25. And the NASDAQ futures down 92.50 this morning. So a little bit of bearishness running around the world here this morning. Let's take a look at our bonds. Now, our bonds this morning are mostly lower. We've got the 2-year bond at 3.94%. The 10-year is at 4.22, and the 30-year is at 4.55. And while that's happening, we've got the dollar moving higher with all these currency fluctuations going on around the world. The dollar moving up. So we'll want to be keeping an eye on that and see how that affects these commodities, which we'll look at here right now. Let's take a look at oil. Oil futures right now are just slightly lower. Oil right now down 30 cents a barrel at 67.77 a barrel. Brent crude at the moment also down about 30 cents at 71.73 a barrel. It's having negative effects on natural gas prices as well, pushing down. This is starting to look like a little head and shoulders top here. So be careful with this on a daily chart. If you're looking just short term, maybe a little bit more pullback might be on the way here in natural gas. So pretty ugly day yesterday. If it breaks this neckline of this, and then I would expect a little bit more pullback in here. Maybe we come back and test some of these support areas in the chart. So keep an eye there on natural gas. If we were to take a peek at cryptos here this morning, well, they're a little bit lower here today. We're kind of red across the board in cryptos, but not so much as to be a major worry. Down $87 a coin here on Bitcoin. Ether this morning down 6.83, so about $7 a coin or 0.35%. And like I said, mostly red on those. And with the dollar moving up, we saw oil moving to the downside. We're also seeing precious metals moving down. Right now, gold futures down $5 an ounce at 3,038 an ounce. We've got silver futures also moving lower, down 33 cents an ounce at 33.66. So we've got that pullback happening in here. Copper is also lower this morning, feeling just a little bit of bearish pressure, including platinum and palladium also moving lower here this morning. So a little bit of bearishness running around the market here, heading into the weekend. We'll see if that holds throughout the day. So what does all that mean? Well, how about we settle in and buckle up? Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's take a peek at these index charts and see if we can get that idea how we want to approach the market for today. We want to remember to shake off that bias and look at the charts for what they are, not for what we want them to be. And when we do look at the diamonds right now, well, we have that situation. I've been talking about this resistance up here and the challenge of that resistance with all the price action and, of course, that 200-day moving average. Well, we broke through it yesterday and we were looking pretty confident there for a while, and then the fade came back in, bringing us right back down, as you can see, just below the 200-day. And then this morning we're seeing just a little bit of bearishness on that, so we'll want to watch that carefully. If those bears do have any inspiration today to push us lower, well, you can see if we were to break these 2 little days low right in here, then the next area down is probably right in here. Breaking down beyond that point, I think we have a pretty good shot of retesting support levels and the lows here in the market. And just keep in mind, don't panic about that, because that's really not unusual. Double bottoms are very, very common, or a retest of lows after a relief rally. Very common. What will be critical is if these prices break down to a new low, because that would signal that we are not done with the downtrend here in the market. And let's take a look at our SPY. Our SPY also struggling in here. We've now got 3 wicks above that resistance line I have here in the chart, that price resistance line. We're still away from that 200-day. We never quite made it up there. And yesterday's fade was pretty substantial, fading back even below the day before's high. So looking a little bit more like an inverted hammer in here. So watch this carefully. If this follow through picks up, if those bears have anything to say, then pushing down through here, we would have one more area, one more small area of support, maybe right in here, and then we would probably start looking for that possible retest. Now remember, we can always make higher lows, and that's a very common pattern as well in the market. If we look at the bullish side, well, of course, we need to break through this resistance up here and try to push this back up. So if those bulls do find inspiration, and I think there's every reason they could, push up into here, we need to see a break of this area and stretch on up and really take a look at that 200-day to see if we can get through there. One thing you want to notice is our short-term moving averages are moving down pretty quickly now. The 20-day moving average right now crossing down the 200-day. So we are really building a pretty good zone of resistance up here once we start that push back to the upside. So keep a close eye on that. Our QQQ, well, the old Qs struggling in here as well. Tried several times here this week to push on through this area of price resistance. Once again, fading pretty heavily, leaving more of a inverted hammer type pattern there in that pattern. Unfortunately, we got earnings from Micron, and initial earnings were really good, pushing to the upside, or the initial reaction, I should say, was really good. But now this morning, we've got Micron going lower after conference call. So keep an eye on that. That's not helping us out this morning. Watch that closely. If the bears can push down through some of these lows right in here, well, you can see on the QQQ, we haven't done all that well here, and we could easily retest these lows and even be in that situation. And I know no one wants to hear it, but that potential that we could make new lows here in the QQQ. So watch that carefully. You can see we're a long ways away from our 200-day moving average. Our 20-day is crossed down. Our 34 is going to be crossing down here in a couple of days through there. So we're creating quite a zone of resistance. That 50-day moving average coming down pretty sharply. And speaking of a 50-day moving average coming down sharply, let's take a look at that Russell IWM. Nice push here to the upside earlier in the week, and then kind of faded in another one of those inverted hammer type patterns. The good news is we've got a little bit of support right in here that is held before, so it's possible IWM can hold that support. And you can see here in the pre-market, it's actually trying to bounce off of its lows and push back up. So if those bears do find inspiration and break down below there, we could pop this down into here, and there is another little level right in there that we could catch for a potential higher low before moving on down to retest the lows. Unfortunately, we have to take a look here. We're just trying to hold the 500-day moving average. Our 20-day moving average is already caught up with price. Notice our 50 is crossed down through the 200, what they call the death cross. So we've got some technical damage really showing up here on IWM. Watch that carefully. If we do happen to make a new low, we're probably going to see a very disappointed market overall, if that were to occur. Now, if the bulls have inspiration here, I think there's every reason they could bounce up off of here and push up. Then we're going to be watching this area of resistance in the chart and then trying to push toward this red line. And that red line here is that resistance that goes all the way back to the low prints of 2021 and 2022. So keep an eye on that. A lot of resistance in that area of the chart. If we take a look at our VIX here this morning, now VIX had a pretty good response yesterday. Despite that market, we moved on down. At the end of the day, we were lifting back up here just a little bit higher. Once again, kind of an inverted hammer in the VIX. We'll want to watch this area pretty closely. There's a good area of price support right in here. You can see that price support runs back across this chart a long ways. So if we can if those bears do find some inspiration, this area right in here might be the place where they find that inspiration to start stretching back up toward these areas of resistance here in the chart, if those bears do get going. And you can also see we're almost back to that 50-day moving average, which might be that little bit of support area in here that would inspire that move back higher there. If the bulls, however, can fight through this and continue to push, well, maybe a full-on test of this area of price support. We're just kind of floating above it at the moment, and then maybe even right on down to this next level of price support could be possible. We could breach right through, get down in toward those 17 handles on the VIX if the bulls can find something to grab a hold of. If we take a look at our T20s, our T2122 yesterday was kind of all over the place here on T2122. We initially in the day on the selling, we were way down in here. on T2122. As the bullishness came in, we turned around and we started to turn bullish. It had turned up in that bullish move and then ended up fading back. But I got to tell you, this fade back here yesterday, it did not seem to have any panic in it. It didn't seem to garner a whole lot of energy in it. So maybe we're just more in a wait and see mode. We could be slipping more into a consolidation. If, however, those bulls find inspiration today, we've got upside opportunity for them to be able to push to that upside. And obviously, we have plenty of downside opportunity for them to push as well if those bears get going here in the market. And then if we take a look at our T2108, our T2108 pulled back, but once again, this wasn't terrible. We just had a very controlled drift back to the downside. So I think there's still possible the bulls could come in and fight this one up. But at the same time, I don't want to assume that's going to be the case with some of the earnings and things we've seen. That possibility that we could start pushing or drifting on down to retest some of these support levels in the chart. Also seems very possible here. So 28% of the stocks holding above their 40-day, not exactly a big bullish warm and fuzzy, but the way the market is acting right now, it's almost feeling like it's going into more of a hurry up and wait or a wait and see on some of these indexes. If we take a look at T2107, T2107 also pulled back yesterday, but once again, no major panic there, no big drop. We've got some support areas if the bears continue to push to the downside. And I think there is certainly opportunity for those bulls to push back if we can get something here today to inspire. And then T2101, well, we had that breadth improvement yesterday, and I'm going to have to give that to the bears on that breadth improvement. And we started off bearish, we ended the day bearish. I'm going to give that one to the bears. So we're seeing more breadth push on the bearish side than we have seen on the bullish side. And that's unfortunate. We'll want to watch this pretty carefully today. It's possible that we'll wear out of that energy on the bearish side and we'll just stagnate a little bit here, and that'll give the bulls an opportunity to push back. So watch that carefully here today. Let's take a look at our economic calendar here for today. And our economic calendar, well, it's a really, really light day. Not a whole lot to get excited about. Today is a quadruple witch. So on a quadruple witching day, we can see some volatility, some weird price action in the market that creates whipsaws and funky little price action in here as all options are getting adjusted and shifted and things like that. So watch carefully for that possibility. We've got Fed speaker here today, and then Baker Hughes rig count, and that's the end of the week here for us on economic data. And on earnings data, it's not a whole lot more exciting. We have no notable reports this afternoon and only two notable here this morning, NIO and CCL. So let's take a look here this morning. NIO, well, it's a little bit lower here this morning, gapping down, but you can see it is trying to push back up off of this support here in the pre-market. And then Carnival Cruise here, well, a little flat on the day. I don't know that that's reported yet, but one thing we want to be paying attention to is we're still in a downtrend. This is a setup for another short in the chart, so this could be a critical report for that today. Not looking too good overall, and looking at our moving averages, we're struggling with the resistance there of the 200-day, so watch that carefully. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful to you, if you can do me that favor and click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much for everyone who does do that. I appreciate it so much. I apologize that I didn't get them all answered yesterday. I think I'll be back on that today. So thanks everyone who does take the time to do that. It does mean a lot to me. Sharing the videos out on your social media feed also helps. Thank you everyone. I truly, truly appreciate it. Let's take a look at a few of these stocks, and remember, they're not recommendations to buy or sell anything. You need to do your own due diligence and look pretty carefully at these charts, because we have still that downward look here in the chart. We also need to be looking at some of those bearish trades here and paying attention to those, and there are quite a few to potentially pick from. So first off, let's take a look. One I think is perking up on the buy side might be LAC. Breaking this downtrend here in LAC, trying to hold that higher low in here in the chart is starting to look favorable. Now we've got to get up through this 250-day moving average. This accumulated moving average resistance is pretty strong here, so we're going to need a little bit of a push or a bump through that. But watch that closely. It's kind of an interesting looking chart, one that I want to be paying pretty close attention to. I'm still liking the way Wendy's looks in here. Now Wendy's still just very, very flat, and we're in that rounded bottom breakout pattern here. You can see that nice little consolidation. So all you'd need to do is place a price alert up here and wait and see if the bulls are going to push this on up, and take your shot at that trade. Nice little rounded bottom breakout pattern though, looking good on Wendy's. There are of course the gold, where we're resting back, probably a good sign for a little bit of a rest back, a little consolidation. I think gold could be setting up for that next move to the upside. And then, of course, when that's going on, you want to be taking a look at some of these miners, KGC, Barrick Gold. All of these are in good bullish patterns, potentially to the upside. Newmont, nice little cup formed here, a little cup and handle maybe starting to form here on the bullish side. So looking kind of interesting there on Newmont. And there's just more of these miners that you can shake a stick at that look really, really good. Take well, not VEV. Now all of a sudden I've got a senior moment, forgot the symbol. But keep an eye on some of those miners. If we take a look at some other areas of the market, you might want to take a look at some of the utilities in here. Whoops. Utilities starting to perk up, holding that higher low in here, coming around. Again, it's more of a defensive sector type thing, but we're seeing some of those come around looking pretty good. I'm liking the way American Tower looks here as well. Nice little bullishness here, pushing up, holding in that pattern, worth paying attention to. One that may be trying to turn around on the big tech side would be AMD. AMD finally making it up through this very long downtrend. Now, you know, the first step is to break through that resistance. The second step is to hold it. So we've seen this a lot lately, where we can get a good surge to the upside and then it just falters and fails. and we end up right back down there. But watch that carefully. If this can hold this higher low in here, then we might actually have the resumption of an upside trend and maybe a little momentum getting going here. It's really going to depend how it deals with that 50-day, I think. So watch that carefully here. It's not ready for prime time, but maybe something to be paying attention to. On the short side, guys, there are quite a few things that you can be paying attention to. Visa right now setting up a bearish pattern. We've rallied back up to resistance here. We're struggling. Shooting star, a little bit of bearishness coming in here today. If those bears were to push back here, that creates what we call a bearish H pattern. There's your H, and it shows us a more downside likely in that chart. Also, this is what we call a blue ice failure. We've got those accumulated moving averages, shorter term moving averages providing resistance up here along with the 50, and then we roll on over. So watch that carefully, and you can look through a lot of these credit card stocks, and you can see that pattern right in here, that failure, as we rally back up to those resistance levels. And here in AXP, we've had a pretty good little rally back up because we got a little bit overextended in the sell-off. Now I would be watching for that potential of this rolling over in here on AXP. I see the same kind of thing in MasterCard. This rally back up to resistance, the potential of the blue ice failure in here on the way. So watch that carefully. Some of these credit card companies feeling pretty rough. And if we just go ahead and move on into the banks, same thing is occurring here. This rally back up, kind of coming up into resistance in those charts. We've got a long way to go to get back up here toward the 50, so we could contact this price resistance in here, the shorter term moving averages, and I see the potential of a rollover. It may not go to a new low, but a retest of the lows, and I'm seeing that in a lot of these big bank stocks right now. And if you look at XLF also giving us that higher low impression in here where we're testing some resistance in the chart. This, however, pretty close to that 50-day moving average. It may continue to stretch a little bit if it can, but I would be watching carefully for that potential rollover here in the financial sector. Let's take a look at some other places here. If we take a look at energy, it's one of the bright spots of the market right now. We've been seeing oil making moves back to the upside, the rising dollar today maybe taking a little wind out of those sails. But that being said, this nice stretch to the upside, if we were to consolidate or rest, pull back in here toward this trend, just rest back into this trend, we might have the next setup here to the upside in these stocks. And there are a lot of oil producers producing interesting patterns here. We've got Occidental, nice little W bottom, broke through that resistance. If this can hold right in here, then I would look for that first higher low, and that opportunity in that. Devon Energy, alerting all day yesterday. There's that W formation there again, though, retested that low, stretching up. So now any rest or hold or anything up in here, I would be looking for that next opportunity in those charts. So keep an eye on some of those. CVS has been looking pretty good here, pushing through to the upside. Another safe haven in the market during bearish times is healthcare. So start looking around through some of those healthcare stocks, and you'll find some good charts in there for the bullish side. So watch that carefully in here. Maybe some upside opportunity that can come in here if that can hold and push to the upside. When we take a look at some of the other ugly places in the market, Las Vegas Sands looks like a short here to me. We made this rally back. It's a very weak attempt at a rally. You can see the head and shoulders in here, and I think this likely resolves itself lower. Win casinos also showing that bearishness pushing down. Looks like a pretty good opportunity here that this could retest lows in the chart. We have some of the defensive sector stocks as well showing that bearishness. Break over here, head and shoulders pattern here in KHC. That's not looking too strong for that possible move to the downside. So there are quite a few of these bear flags, bearish patterns in downtrends like Datadog to be paying attention to in the charts. So just kind of a mix here of potential trades. I would, in a way, the way the market's looking, I would kind of favor some of the bearish. Just a move with the market condition until we can kind of see those bulls picking up some momentum here in the market. Things like eBay, this lower high, looking like that could potentially roll on over. Not a good sign here. Home Depot's not looking good. Lowe's not looking good at all. So watch those carefully. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Some days it's just better to take the day off and go do something fun instead of feeling the pressure of a market like this and having it get to you. Remember, as a trader, you're the CEO of your trading business. And you're entitled to, as the business owner, to just step away for a while and not worry about it just a little bit until things settle down here in the market and we start to see a little bit more of that bullish energy. So maybe take some time off, not worry about it so much. Today could be a very light, choppy day. So with that, everyone, have an awesome weekend. Be careful, be safe, and I'll see you back here bright and early Monday morning. Wish you all the very best.